Hello and welcome back. This is our first Time is Money for 2009. I'm Dr. J from OptionMonster.com, and here's what we're watching this week. By the way, brought to you by TradeMonster, our sister company, and I use TradeMonster for trading as well. They are, of course, a deep discount brokerage firm. Stock $7.50 flat, options just 50 cents over at TradeMonster.com, and they launched some pretty cool stuff this week, folks. Spread Maker, which is a program that can get you in and out of the spreads that you've put on. Fabulous way to go. Nobody else has it. Spread Maker, trademarked over by the guys over at TradeMonster, and as well as the simulation programs. So many of us had wanted to simulate, well, what if I did this on top of my portfolio? What if I sold this call spread over in this particular index or whatever? Well, this is a fabulous way to simulate those trades, and then if you like the way it looks, you could fire it off and put on that trade. But anyway, a lot of cool new stuff over at TradeMonster, so please take a look. Now, as far as to Time is Money, because it is, time is money, we've got the big JP Morgan Healthcare Conference kicking off Monday next week. We've already seen some movement out of a lot of the stocks that will be presenting. I thought I'd highlight a couple of them for you here since that kicks off Monday next week. CELG and AMGN, along with WellPoint. All three of those stocks, CELG, AMGN, and WellPoint, present on Monday next week. So right when we get started trading, these stocks could be active, and if we start seeing unusual activity, heat seeker, depth charge, bullish, bearish, we'll be talking about it at Option Monster, but make sure you're aware of those because those are three of the biggies. They come right at you Monday next week. Then we've got Biogen, IDEC, Pfizer, and Merck on Tuesday. So three other big ones coming at you on Tuesday. Biogen IDEC, of course, has Tisabri with Elan. Elan had a lot of rumors this past week. ELN shares shot up. We had a real nice trade on in there over at Option Monster, and Biogen is one of their partners for that Tisabri, a treatment for multiple sclerosis. Then we've got on Wednesday Wyeth, WYE, along with Baxter on Wednesday, and also Stryker, which is like implantable hips and knees and things like that. All three of those stocks, Wyeth, Stryker, and Baxter on Wednesday. Now let's shift gears a little bit and see what else is on the hook for conferences next week. The Goldman Sachs Energy Conference, 2 days in Key Biscayne. So you can bet a lot of the folks from the East Coast want to be down there in Key Biscayne. That's Wednesday and Thursday next week. Some of the big companies presenting there include Occidental Petroleum, OXY, Chesapeake Energy, CHK, Marathon, MRO, along with XTO Energy. That's X like X-ray, T like Tango, O like Oscar, and then the two Nobles. There's Noble Energy and just Noble. NE is Noble, and Noble Energy is NBL. All three of those big ones next week at the Goldman Sachs Energy Conference. And we've got National Retail Federation coming out with numbers on Wednesday next week as well. So those are really the focus for the first half of my week next week, and I thought I should tell you about it. Come back from the break, and I'll have the stocks with earnings that we're watching and why right after this. Okay, Monday we kick off, and again, thanks to our sister company TradeMonster for that brief break and for sponsoring these programs. Again, that Spread Maker program over at TradeMonster, I'm a user, I love it. You got to come over and check it out. And remember, you're trading for just $7.50 for stocks, options 50 cents. Great stuff over at TradeMonster. It's just getting better. Monday we kick off the first stock in the S&P 500 to come out with its earnings, Alcoa. No big trades around this one, folks, but I just cite it for you. They came out this past week and more or less gave us a look ahead at next week. Didn't excite me, didn't depress me. I see no real activity to drive me in that one on Monday. But on Tuesday, Linear Tech, LLTC. Linear Tech, a lot of action in this one. Stock's down from $33 to $18. Then it rebounded back up to about $22. On Friday, we noted unusual activity, buying of a put spread. The February 2250 puts and then selling the February 20 puts. So they're looking for it to pull back after this recent run up, because obviously if they're buying this put spread 5,000 times for 74 cents, they're looking for downside action and or some protection in the short term going into Tuesday's earnings. So make sure you're looking at that. That's LLTC, Linear Technology. Wednesday we've got Xilinx, XLNX. Some activity in this one. Stock's down half. It's down from $28 a share to $14 a share. It bounced to $16.50, and we think there are some great plays in this one because of volatility, ways to take advantage of it. Because remember, next week is expiration for January options. We'll take advantage of that by selling the January 1750 calls, and we'll buy the February 1750 calls. This is just a simple calendar spread or a time spread, folks. We're going to pay 40 cents for that spread. If this stock drifts up towards that strike price of 1750, well, that's when the spread reaches its zenith. It will explode and probably be worth north of $1, more than a double on our 40-cent investment. Like our odds, and if on the other hand the stock falls out of bed or springs up a lot higher than 1750, we've still got a nice trade on here because for 40 cents, I'm not terribly worried about where this one's going against us. I think it's cheap and a great way to play, but if you want more of a directional trade, hey, February 15 calls, you could buy them and sell the February 1750 calls. You'd be in a bull call spread, a vertical, and that spread trading for about $1.30. If you're right, and if I'm right, and the stock's 1750 or higher by next Friday, well, spread's worth $2.50. Lastly, take a look at Intel, INTC. Intel's got earnings on Thursday next week. I would be a straight buyer of stock here at about the $14 level, and then I'd sell the straddle at the 14 strike for $2. Now, what does that obligate me to do? If I own the stock and I sell the call, that person that I'm selling that 14 call to, of course, has the right to call stock from me. It means my position would be gone. On the other hand, I'm taking on the obligation of buying more stock below 14 if I sell that 14 put. So if I'm collecting $2 for this spread, if the stock's 14 or higher, I'm going to make $2 on a $14 investment like that. On the other hand, if the stock goes down, I bought my first 1,000 at 14, I took in a $2 credit, I'm buying my next 1,000 at $12, my average price 13, over $1 under where the stock is trading right now. Again, I like my odds, and then we'll reassess from that point. I'm Dr. J from OptionMonster.com. Remember, there's lots of ways you can use options to get long the market, short the market, trade for a sideways market. You can see lots of free education right on the website over at our sister company, TradeMonster.com, who sponsors this. Remember, trade stocks, $7.50 over there, flat. Whether it's 200 shares, 2,000 shares, $7.50 is all they charge. Options, 50 cents a contract. And with their new spread maker program and their simulators, you can take a look at your portfolio, how it would look. I love this stuff. Make sure you take a look at it and come back again next week for more Time is Money.